What's up, guys? Ooh, this looks kind of close. All of a sudden, it like zoomed in when I press record. I don't know why. Either way, it's in the screen, right? Pretty good. Okay. So I want to talk about some pretty fundamental stuff, man. That's the thing. Like, I have to admit it. Like, the stuff I'm about to talk about is kind of breakthrough, and nobody believes that stuff. Nobody wants to believe it's like some new stuff. Cause you might ask yourself the question: how do people like miss this for so long? I don't know. Don't ask me. I'm not them. I'm just the guy who didn't miss it, I guess. I figured some stuff out. I'll explain to you actually how I figured a lot of stuff out. I actually explained it before, but I'm not gonna get into it right now. It actually has something to do with cryptocurrencies and how people are investing, and me trying to figure out how and why the prices were going up and down before I invested. I was trying to make a safe investment, so I was like, why is it doing it? So I'm like, oh, supply and demand. Oh, and then just after that, I realized, okay, well, that's supposedly money. If that's, well, what about regular money? Like, it's all the same stuff, and that's really pretty much how I got there. But with that, I have like a whole new understanding of economics. I'm not gonna lie, and I might seem like an unassuming guy just because I'm just like, it is what it is. Like, I don't have like credentials. I'm not like some Harvard scientist or anything. It just I happen to figure some stuff out, and I'm actually kind of surprised if nobody else really understands this. I have a suspicion that other people do understand it, but I think a lot of those people they kind of keep it to themselves because it's very advantageous to do so, especially if you're in certain positions where you can utilize this knowledge. I personally am not because I'm not like a super rich guy. I don't have a bunch of money that I can use to like invest and manipulate markets or anything like that. I have no power that a lot of other people might have. So I think a lot of those people, they have interest in keeping certain knowledge to themselves. And well, I'm kind of tired of people always like kind of like run around like chickens with their heads cut off, not knowing really what they're doing. It seems like and that's when I kind of set people in the right direction a little bit with some pretty fundamental knowledge. And with that being said, so what we're going to talk about first is it sounds so primary, and it's like people probably gonna be like, well, I don't need a lesson. It's like, well, just let me do it my way. Okay, it's like the same stuff maybe that you've heard before, but it's gonna be like a little bit extra. But the fundamental aspect of everything in economics is, well, first of all, it's trading. That's all economics is trading. It goes all the way back to like people living in the woods, and like some of them were picking berries, and other ones had like sticks with stuff on it that they could trade. People started trading a long time ago. Eventually, it grew into homesteads where people specialized, and they grew into entire economies. And eventually, money came around, and that's got a little bit more complex. But really, at the end of the day, it's all just trading. If you're gonna trade your berries for a spear, okay, that's a trade. Boom, deal made. So many berries for one spear. Simple. If you're gonna trade berries for money and then the money for a spear, it's the same thing. You're making a deal and then a deal. It's the same thing. It's just trade. It's just an extra step. And with that, understanding that everything's just trading, you have to understand that there are, there's competition in the economy. Maybe one guy said he'll trade you a pound of berries for your spear. Another guy said he'll trade you 2 pounds. Another guy said 3. Which one are you gonna go with? Of course, you're probably gonna go with the guy who offered you the most, unless you just have like some special like friendship with somebody else. But generally speaking, you're gonna go with the guy who offers you the most, and that's competition. And that is supply and demand. That comes into our understanding of supply and demand is that whole competitive aspect. And a lot of people, since money came into the equation, it's like for some reason in their head they want to act like money is like the separate thing. That's what I said. I learned a lot of this because I started looking at cryptocurrency like an investment vehicle, but then I realized it could also be used as money. I was like, wait, is it a money or is it an investment vehicle? What is it? And I'm like, wait, it's just a good, just like any other good. It's an investment vehicle if you want it to be, or it's money. It can be, it's a good. Just like I said, I can trade berries for money for a spear, or I can trade berries for a spear, or I can trade berries for a slingshot for a spear. You see what I'm saying? It's just trading, and money's just one of those things that you trade for to eventually get where you want to go. Money is just another type of good when it really comes down to it. And that's the thing that a lot of people will be like, what? That's absurd. And that's the thing, they don't want you to understand that. They want you to think money is like this special thing that's just like doesn't follow any of the common sense rules of trading. It's like it does. There's a supply of it and there's a demand for it. And it has a value based on the supply of it and the demand for it. And there's a bunch of different monies in the economy too. There's competition between them. And they're all just goods. Like if you look at the US dollar, for instance, that's just one brand of money. It is. Gold, if you want to use it as money, it's another type of money or a brand. I mean, you can have, it just depends what you're doing, Like the US dollar is just paper now. Actually, it's not even just paper. It's digital, half, like most of it, and just a little bit's paper. It's with pretty designs. It's a brand. It's not even a good. It's not even like gold. Gold has like real physical properties and it can be used for stuff. That's a real good in itself, but the paper money, the digital money, that's nothing. That's literally just a piece of paper with pictures on it, if that, because everything else is on the computers. It's more or less, people say it's our faith that gives it value. It's not the faith. It's not the faith. Faith does not give anything value. It doesn't. The only thing that gives money value is what you're willing to trade for it. And we're going to explain that right here. Okay, so like I just said, if you have some berries over here and you want to get yourself a spear, what do you got to do? In this modern world, you got to go through money. And so basically what you're going to do is you're going to trade your berries, like a pound of them, for a certain amount of money. And then hopefully that certain amount of money that you got from them berries is enough to get that spear. Okay, here's where, I don't even feel like getting into that. That's obvious, okay? Simple stuff, obvious stuff. I don't like getting into the drawing. I get lost in my own world with that stuff. Just leave that there for now. Just think about it. So yeah, the value of money is going to be determined by either how many berries you'll trade for it or how many spears you'll trade for a certain amount. So let's say whatever the money is, let's say it was $1, okay? You had $10. How many pounds of berries could you get for $10? Whatever it is, that's the value relative to berries, okay? How many spears could you get for $10? That's the value relative to spears. The only type of value that exists in the economy is relative value. That's all it is. To you personally, you could really, really value something. You could just love berries, and it's like, I would die for some berries, but to other people, it doesn't matter. They're like, dude, I don't want your berries. To them, it doesn't matter. The only thing that gives anything value in the economy is what you're willing to trade for it. And the only thing that really has value at the end of the day is what people want. And people are only willing to trade things for things they want if they really want them. So there's primary value in, people really wanting something to consume. Like I say, you want a house, you want to live in it, you want berries because you love to eat them, you want a guitar so you can play it, you want spears so you go hunting, you want whatever, okay? That's primary value. That's real human intrinsic value. That exists, okay? Everything else beyond that, you don't really want money, you're not consuming it, you want money so you can get the spear because you want the spear. You see what I'm saying? You're always trying to get back to primary value. So that's the only real value in the economy, is the primary value. Everything else, all the money steps or whatever else you're going through, trying to eventually get something that you want, and you might even collect money just so you can have it, so you can get what you want when you want it, okay? All of that other stuff, that's like secondary value, and it doesn't really have value, and it's kind of like this, it's almost, I don't want to call it a pyramid scheme, but it's like it doesn't really have value. It's propped up because it's being used for people to eventually get to primary value, and it's like, and you can see that, and there's all types of investment tools in the economy. I mean, dang, we'll go into this a little bit just for the fact of it. Let's just assume this was a cryptocurrency. Like I said, I was looking into the cryptocurrency. We're gonna get into it. Why not? Let's say this is Bitcoin. What's the Bitcoin symbol look like? It's a little B with a line through it, right? Green or something like that. Bitcoin. I have no idea what Bitcoin looks like. Okay, so Bitcoin, it was being used as an investment vehicle. Okay, and I was looking into investing in it so I could possibly make a profit before the whole thing exploded up to like 20 grand. I was like, wow, and then it was too late after that. But generally speaking, here's what was happening. For a long time, I heard about it like back when it first came out, and it was just going, it was going and going, and all of a sudden, whoosh, it went up like that all the way to 20K. I heard about it when it was like a couple cents, and I actually downloaded a program to where I could like do the mining, but my computer wasn't fast enough, and I said, screw it, I don't even care. I didn't even think about it in an investment way. I just heard about it. I was like, hey, that sounds cool. Digital money that's kind of unregulated and stuff. And anyway, later on, right before the explosion, up to like 20K, I was gonna invest. That's when I started paying attention. But I asked myself the question: what was causing it to go up? Like, what would cause it to go down? And I was like, I don't know. I don't have the answers to this. So I had to like think about it deeply. I was like, I don't want to just throw my money here. Like, I actually went and got a job because I wasn't working for a while. I was like, I'm gonna get money, so I got to throw it in there real fast. So I had all this money, but then I was like, wait, I'm not just gonna throw it in there. I just like I went and like worked my ass off for that money. But so I asked myself these questions, and I realized that you have to think of the motivations of the people who are investing. They want to make money too. So what are they doing? They're buying this asset at a low price, waiting till it goes up, and selling it at a higher price. Now, they would only do this if the price was going up. Okay, fair enough. That's an appreciating asset. Very simple. But what a lot of people don't see is that the people who are actually buying it are actually decreasing the available supply because they're gonna buy it and hold on to it, and then with their bid that they're making for that, they're offering a certain amount of money to buy it at whatever price. With every bid, the price is going up. So at the same time, they are bidding up the price. There's an increasing demand for it because the price is going up as well. I mean, see, it's like a trifecta. So it starts appreciating, okay, and then it attracts people. They're like, look, that's an appreciating asset. I can make money off that. So they go and buy it, add to the demand for it, which increases the price, which further makes it look like an appreciating asset. But at the same time, they're decreasing the available supply, and you can look at the trade volume and stuff like that. And that's causing it to supply and demand, lower supply, higher demand. It's causing it to appreciate faster until it eventually exponentially appreciates. And then it has like this steamroll effect, like everybody jumped on. And that's exactly what happened with Bitcoin. And eventually got all the way up to 20K, and then people were like, I don't even know if I want to buy that anymore. I don't know if it's going to even go any higher. I looked at it, I'm like, no way, because I don't think I can make money off that. It started slowing down. When it started slowing down, people sold. When we started selling, it was the opposite effect. It was a decrease in demand and an increase in available supply, and it went down to like 6K or something like that. But that's something I call the investor cycle. That's not something I ever heard anybody talk about. It's something I figured out just by thinking, to be honest. And I ain't never heard nobody talk about that. I heard people say stuff like, yeah, no, it's supply and demand, and it's, because I was trying to show it to people, and like they're all trying to be all like, yeah, of course we know about that. I'm like, no, you don't, because I'm listening to like these, I'm listening to people like Warren Buffett on like MSNBC and stuff, and I'm like, dude, they ain't talking about this. Like, I can see what they're trying to say. That like Warren Buffett was like, stay away from Bitcoin. It's a bubble. You can go watch the videos, 1,000 videos of him saying the same thing, but he wasn't explaining the factors of why, because it was the investor cycle, and it happens over and over. You always see that, and that's just kind of proof of concept. I know what I'm talking about. It'll do it again, and every time you see a bounce. And here's the thing with investors: they like to jump into some shit and talk about like fucking whatever they call it, technical analysis. You ain't got no technical analysis. They want to say, oh look, that's head and shoulders. It's like, what are you talking about? What you have to pay attention to is the supply and demand, what the investors are thinking. If there's like some news around it that says it's gonna tank, a lot of investors are gonna be like, well, let me get rid of it. That's going to decrease the demand for it and increase the available supply. And you gotta understand that. That's what this is all about. Anyway, I'm gonna leave it there. With that being said, that's just one example of how the value of an asset like Bitcoin changes. And you can see the same thing with any type of money. You can see it with dollars, you can see it with gold, you can see it with everything. And it's, especially if it's being affected by investors. If it's a consumer good, if it's just like food or something, it's not, nobody invests in food because, shouldn't say it like that. You know, people actually do invest in food, but um, they have businesses where they sell food and stuff, and you can't. I was just thinking about like wheat and stuff and futures on the I don't know, on the whatever market that is. But generally speaking, what I'm trying to point out is you can see that happening with Bitcoin. You can see it happening with the dollar. The dollar is actually decreasing in value because they're just printing it. It has everything to do with supply and demand. It doesn't have to do with random happenings. It has everything to do with supply and demand. I just explained how and why that happened. If you look at the dollar, it's more or less like a just decreasing in value. And that's just because of inflation. That's just because the dollar, basically the supply of the dollar have been I'm not gonna say hijacked. The monetary supply in the United States went from being kind of government printed money to being Federal Reserve banknotes, and that happened through a process called fractional reserve banking, which basically allowed these banks to like pretty much fraudulently print money. And so they basically are able to create money on the spot. If you go to a bank and you say, I want to get a loan, they'll say, well, you got anything to like put up as collateral? You say, sure, I got my job, I got this, I got that, whatever, you got credit. And they'll basically make you sign a contract that says if you don't pay it back, they'll seize your property and auction it off to rebalance their books. But on the spot, when you sign that contract, they literally go on the computer and just create money right there on the spot. And that's fractional reserve banking. So these banks are actually creating money, and they are like just blowing up the supply. And that's the dollar. And that's another function of supply and demand. It's really an increase in the supply while the demand stays maybe the same. The demand might even shrink because while they're increasing the supply of it, the value is going down even if the demand stays the same. But that might send investors away. They say this is a depreciating asset. I want nothing to do with it, and that might send them away, which will decrease the demand for it and just cause this total downfall of the whatever asset it is. In this case, the dollar, and that's actually what's happening right now with the dollar. The other countries have been using it as a reserve currency for various transactions, and there's a high demand for it because of that. But the supply has been just inflated to oblivion. They have this thing called quantitative easing that they've been doing, just blowing up the freaking currency. The Federal Reserve is like the central bank, and it controls the interest rate, and it'll lower the interest rate, which allows people to get low interest loans, which will, when people go to the bank, like I said, the bank just creates it on the spot. So you got a whole bunch of people going to the bank, there's a lot of loans coming out, increasing the monetary supply, that's inflation. And it just decreases the value, and it makes it look like a bad asset to be holding on to. It's a depreciating asset. Anybody who's trying to make money is not going to buy an asset at a high price and sell it at a low price. That you're gonna lose money doing that. Okay, so when they see that happening, inflation, they want to get rid of it, decreases demand, and what happens? It just drops the demand, increases the available supply again, and it just goes crashes, just like you seen at the top of that crest right there. And those are some pretty fundamental aspects of money. And like I said, money is just another type of asset. Like I said, Bitcoin, dollars, cryptocurrency, there's a supply and demand for it. It's very basic, and you can see with everything. I mean, there's a lot more to this, honestly. I go pretty far into explaining what these people do. Then we'll leave it at that for now with this video. I'm going to make another video right after this talking about some other stuff. So stay tuned. Look for that video. I'm out.